Today, I'll give you the difference between the stock market and the crypto market. And no, I won't be laying specific ticker symbols of which you should invest in. It will be a foundation, and you can make decisions based on that assessment, whichever is profitable for you. So there will be a breakdown of stock market as well as crypto market. There will be the pros and cons, why you should invest in either. Like I said, I won't highlight various outlets for you to invest in. I won't give you an instance or say buy this or buy that. It will be completely 0 to 100 knowledge on both markets. So the first one we should explore is the stock market. The stock market is a platform where individuals can get exposure to publicly traded company, or is a platform where publicly traded company list their shares to invite the public for subscription. So for instance, if you wanted to buy Tesla shares, of course you can't give Elon directly finances to purchase shares. Maybe I can, but you can't. So you understand the point. And the brokerage is an intermediary between you and the publicly traded company. I've covered all of these basic concepts like ticker symbols, the meaning of a brokerage, and all of these low-level terminologies in my previous video. So I'll link it in the description. But the point I'm trying to highlight is, in that video, you'll learn very quickly all of these ticker symbols, brokerages are fancy terms for very basic concepts. It's just to sprinkle a tinge of professionalism in your communication. Ticker symbol, for instance, means the unique letters a publicly traded company bears. Tesla is TSLA. About to invest in Tesla, you impute that unique symbol so as to not gain exposure to a different company. So ticker symbol is the representation, the unique symbol of the various companies. And no, two or more companies cannot use the same ticker symbol. In fact, during the .com bubble, I can recall this company who saw a 90% spike in stock value because people mistakenly invested in the company as opposed to the real choice. So they had similar ticker symbol, not the same, but similar ticker symbol. So that's the stock market. The stock market, you can use it, at least I invest in the stock market to preserve my net worth. If you look at the Forbes list of real-time millionaires, they are stockholders, shareholders in various companies. Now, if you think Elon has a debit card that contains 500 and something billion dollars, then think again. It's its company that was that much. The collection of his various shares in various companies is worth that much. Also, when you go out and buy one share in Amazon, for instance, technically you own Amazon. Plus, I'm not trying to highlight what you should invest in. This is for illustrational purpose. So if you buy one share in Apple, you can walk around and say, I own Apple shares, or I own the company Apple. Tim Cook works for me, and you're not wrong. But if someone with multiple your holdings make that same declaration, he's right, and he's more valued in the company than you. He has more influence, more say at the company than you. The same with 1,000 shareholder relative to 100,000 shareholder. Both are owners, but their influence as touching the decision of the company, it varies. So the degree of percentage or shares you own in a company is equivalent to your voting rights. And there are companies where they offer two kinds of stocks. There's special A stock and there's special B stock. This is intermediate level. That's why I suggested you should check out the previous video on stocks. I have an entire playlist for you. So what founders do, which is very interesting, is to separate the stocks class into different sections. So there is a section of stocks that has no voting rights, and they, the founders, maintain a huge percentage of the stocks containing voting rights. That's why Zuckerberg can own under 20% of Meta, yet retain 50% of voting rights. So it's not necessarily the share amount, but the kind of shares you hold. I don't want to get into advanced subjects like deferred stocks, deferred stockholder, preference stockholder, but I suggest you start investing. Do not wait till you've sustained the whole information before you take that step. Start where you stand, and more tools will be found along the way. That is the problem with people. Instead of investing now, investing with what you have, you want to sustain all the information, have every single knowledge of what each and every button does, every single knowledge of what every company does. It doesn't work that way, sir. You start where you stand. Think of it like dieting. The first thing you need to do is the basic stuff. Walk, stop stuffing donuts in your mouth, do push-ups, the basic activities which then build disciplines that acts as the shoulders of giants you stand upon. Going after intricate subjects like nutrition and food and trying to do all of that would bear you down. At the end of the day, you notice you have achieved nothing. We've established the fact that information is infinite. Information is infinite. So if you sit and try to bug yourself, it would overwhelm you, as opposed to start investing in something you understand. And when you come across a bridge you do not fully understand, you have the unique opportunity to learn how to build the bridge and use it immediately. The best kind of knowledge are the ones you use, not the ones you shelve. I'll say it again. The best kind of knowledge are the ones you use, not the ones you shelve. You can spend years trying to learn the stock market, or you can start investing now and learn as you move. Because what is learning? Learning is basically feedback and execution. You take action, you see how it works, you take feedback, the process repeated over time. Very recently, I started playing the game chess, and I never went to YouTube to understand strategy or to learn the various or how pieces work. Yes, I understood the rudimentary process, which is the various points each piece carries, the functions of each piece, and I began playing. Strategy is something I developed along the way, as opposed to bugging myself, engaging in endless of YouTube videos. So once you're done with the rudimentary process, once you're done with understanding what each and every piece does, the roles of each piece, as long as you're competent enough to play the game, then you start. You don't wait. You don't wait, sir. And one of the things I enjoy about the stock market is this idea that it's a net worth builder. It's not as volatile as its counterparts. And I'm trying as much as possible to stay on track. I do not want to create a video where once I list an advantage, I compare it to its counterpart. I want, once I'm done, I make the comparison. I'm willing to make an exception. In the case of crypto, It's a very volatile entity. It's not based upon anything. If Bitcoin goes to $0, there's nobody you can hold. There's no CEO behind it. There's no assets that can be sold to offset its liability. But not the case of stocks. If you invest in Tesla, you can see cars chunking out the factory. You can see activities ongoing. You can see how your money is being invested, which is a plus, by the way. For instance, I own Apple stocks, not because they're performing, but because I use Apple device. So I'm close to the products. I know when people feel bad. I know when the product is going to rise. And again, this is not trying to tell you what to invest in, solely for illustrational purpose. But I use Apple device, therefore I own Apple stocks. It's the same thing with you as a worker. Do not invest in something you do not understand. I won't go out and buy AI stocks just because it's fashionable or founders believe it's the next big thing. It's foolish. It's fucking asinine. I will invest in something I understand, something I'm close to, something I can make decision based on personal experience relative to solely depending on 10Ks and 10Qs. By 10Ks, I mean it's a quarterly financial report. No, 10K is an annual financial report. Well, thank you. 10 by 10Q, not thank you, not gracias. 10, the number 10, and Q. It's the quarterly report of a company. So instead of depending on solely on 10Qs, you can have intimate understanding of the product, therefore the shares. For instance, you're a worker, or you know McDonald's, during the festive seasons, you have a lot of orders. As a consequence, people want to bond with family, people want to spend time, and people want to have all of these activities that require sale. And as a very smart guy, you understand more sales reflects on the earning report. More sales reflects a very strong earning report, which causes the shares to increase, making it more desirable to investors. So at a certain time, it is best to buy XYZ stock. Now you've sustained this idea, purchasing the stock, selling it, repeating it multiple times, now you're profitable. So invest in something you understand. I had a guy one time who bought aviation stocks at the infancy of his career. Imagine how groundbreaking it would be. Airplane stocks in the days of old, something that can fly on air. So he bought airplane stocks because of this idea, this same promise is going to be the next big thing. Now, airplane stocks, as you can see, aviation stock is grossly underperforming. Akin is AI. AI stocks, we believe, is the next big thing. But as we've seen, the earnings reports of various artificial intelligence companies is not as strong as we hoped. I believe the AI industry has declined by 20% from year to date as at the time of this recording. So do not invest based on promises, but invest. Notice my choice of words. You can trade based off promises. I'll give you the distinction real quick. Investor is someone who lays up capital for a long time in exchange for financial return, while trading is someone who lays up capital for a short time in an attempt for financial return, and both have tax implications. For instance, you'll be taxed more on your earnings as a trader as opposed to the former. So both have implications. So the stock market is one of the best places you can build your net worth. It's steady, like I said, it's more tangible. And one of the things I understood about the stock market is if it crashes, let's say for instance it crashes, I'm not the only person in trouble. Governments invest in the stock market, presidents own shares in multiple companies. As a matter of fact, the S&P 500 index is worth trillions of dollars, and it contains the top 500 performing US companies. So to the degree in which you are listed is relative to your market cap. Market cap is a fancy word of is a fancy word for saying the worth of your company. For instance, Nvidia is touted to be the most valuable company, as at the time of this recording, it has 4 point something trillion dollars in valuation. So it's most likely to occupy the number one space in the S&P 500. S&P 500 is grouped based on percentage. So relative to your market cap size is relative to how much stake they will take in your company. So the $4 trillion company maintains a 3 to 4% of returns on the S&P 500. So in that progressive manner across various companies. So once a company becomes more valuable,